Hello and welcome. You're tuned into CNBC TV18 Prime. Let's get cracking on a brand new edition of The Big C from the CNBC TV18 Ionic Wealth Studio. I'm Manisha Gupta, back with your daily dose of commodities, crypto and currencies. As always, before we go to our guest for the day, here's a quick look at the market stocks on the Wall Street. Well, they extended losses from the previous session. Dow closed down nearly 500 points, while the S&P logged its longest slide since the month of August. The fall led by the tech sector, but ended off intraday lows. The day's moves were pressured by AI chip darling Nvidia, which fell almost 3% ahead of its earnings tonight. And fellow Magnificent Seven members, Amazon and Microsoft, as well saw a decline. Meanwhile, markets in Asia trades largely lower, mirroring moves on the Wall Street. As you can see, it's a bit of a red rather, on the screen there. Let's also take a look at what the crude oil prices are doing right now. Well, the prices have edged up after the kind of decline that we saw in the markets a couple of days earlier. The traders are assessing the impact of sanctions on Russia, as well as the U.S. President Donald Trump saying that his administration has started interviewing for the next Federal Reserve chair. Ole Hansen is head of commodity strategy at Saxobank and joins us right now to talk about all of those things that are happening in the international markets and, of course, its impact on commodities. Ole, hi, thank you so much for joining in. Well, how are you reading, first of all, the U.S. president now interviewing for a Fed chair? This could have a lot of implications. How is commodity market looking at it?
Well, I think first and foremost, Manisha, it's going to have a positive impact on the precious metals once again, simply because we're right now in a bit of a tug of war between what's going to happen at the December FOMC meeting. The expectation for rate cuts has been somewhat reduced, but I think it's quite clear that the U.S. president wants to elect a Fed chairman who's got his ear. Who's prepared to, who's got the same kind of ideas about where interest rates should be going. So the fact that we are already now focusing on that basically means that we will probably see further rate cuts into the new year. And if that happens at a time where we also see some economic weakness coming through in the data, then obviously this is pointing to further strength in precious metals. And I think it's also a reflection of what we've seen in the last week or so. As you mentioned, we're seeing a correction in the stock market in the US. So far, it's orderly. We haven't seen any panic selling, but at least volatility is moving higher. And normally when volatility goes up, we tend to see liquidation across markets. We saw a bit of that earlier in the week in precious metals, but since yesterday, markets starting to move higher again. So I think that is a combination of underlying demand still there, but also market focusing on the prospect of incoming rate cuts.
All the other thing really is the Japan monetary policy. I mean, that clearly has been a headline right now. Apart from that, the expectation that the US M1 and M2 and M3 money supply is near record, and then abundant liquidity expectations going forward in the next year as well. Would you say all of these factors somewhere also would be supportive precious metals?
I think it will, and it just still shows point to the underlying reason, which I think is still the main reason why investors around the world is waking up to what Asia has been seeing for a while, but what the investors in the West are increasingly also seeing, that they are concerned about the the trajectory of the U.S. economy and the debt situation there. And that basically means it calls for some a little bit of a cautiousness, and that basically means that we are seeing a build-up in gold positioning. And I think we're still at the early stages of that if we look at what asset managers around the world are currently holding in gold. So that is providing this underlying bit that for now has basically prevented gold from really suffering any kind of deleveraging sell-off as we've seen in previous period where volatility rose and stock markets were showing some weakness.
Well, we've seen a big, huge range of gold for 2025. How are you looking at this year ending now, at around what levels? And for 2026, how are you looking at this range? What are your upside and down targets for that?
Well, as long as we hold really above the, first and foremost, the recent lows from this latest correction, but perhaps even a bit lower than that, where we find some key technical levels. As long as we hold that, there's not really any reason to worry that we're seeing an end to this rally. The correction that followed or consolidation that followed the record high back in April this year, it took around 4 months before we started to move high again. So with that in mind, and considering how fast we moved up between August and October, I still see the high end for this year. Basically, we have to be a little bit patient. But looking at into next year with the trajectory of the U.S. economy, with the prospect for lower rates, the debt situation, geopolitical risks that are still elevated across the world, I see the price move up towards the $5,000 level. But then again, it's just a number, as we've seen this year, 50% rally. That no one really saw that at the start of this year.
Oh, absolutely. Or also, how are you looking at silver prices now? Because, when I read all those global banks and brokerages reports and predictions for 2026, someone talks about as low as 35, and then there have been reports suggesting 75 on the higher side as well. What number are you looking with?
Well, if I look at 5,000 in gold, I'm looking for an even relative higher number in silver. The 35 would really only be something that should be entertained if we run into a deep recession. I don't really see that occurring. So the industrial side of the demand equation, I think, remains relatively robust. And then on top of that, we have the investment demand, which is probably going to be the main driver next year. But overall, we have a market which is in tight supply. That goes with platinum as well. So with that in mind, I see the gold-silver ratio currently around the 80 level, moving down towards 70. And I haven't worked out the numbers, but that obviously does indicate that we could see silver quite a bit higher next year if that comes through. But as we also have seen once again, silver is gold on steroids, basically meaning that you have to be a bit more risk or acceptable to risk, because of the corrections, and the volatility is somewhat higher than what we see in gold. But the fact that we found support this week below 50 and we're now back above 51 does indicate, just like gold, that there is an underlying bid in the market that are looking to get activated on dips.
I am going to push you for a number, Ole. Are you looking at 65, 60, 70? There must be a range that you're working with.
We are definitely looking at somewhere between 60 and 70. I should have obviously worked out the numbers before I got into the studio, because I always look at it as a relatively played to gold. But with a ratio of 70 and a gold price of 5,000, then obviously that's really where the ballpark area that we're looking at. So yeah, a stronger performance than gold next year, based on the assumption that, or based on the fact that supply is tight. It's still historically relatively cheap compared with gold, and making it a better deal for some to entertain than going in and have to pay a record high price for gold.
Ole, how are you also looking at base metal prices? And let's start with copper right now. We're looking at some supply disruptions onto this one. And, well, yes, it also has seen a bit of a bout of profit-taking in the last couple of sessions there. But then with abundant liquidity expectations and mines doing what they're doing and supply disruptions there. But majorly, as you said, that the industrial demand would be strong, if not so much from conventional areas, definitely from renewables and data centers and AI, etc. With all of that in the background, how are you looking at copper?
Well, with all those you just mentioned, it really is very difficult to paint a bearish picture for copper. So with that in mind, if the downside is limited, then obviously at some point we will have to test the strengths on the upside, and that obviously does tie in with what the underlying supply and demand dynamics will tell us from the physical market. What we're seeing just recently, just as you mentioned, is a bit of profit taking as well in copper. I suspect a little bit that copper once again has been gripped by this AI fever that we saw early this year, when copper reached the record high before settling back down again. That some investors looking at to have missed the initial rally in AI looked for alternatives, and they found copper and they took copper up, not fully understanding how copper worked, because you cannot buy copper in anticipation of what happens in 2 years' time, but you have to base on what happens right now. And I think some of that buying reason was a little bit speculative, related to the ongoing rally in the AI stocks, which is now paused, and that is just giving the market a little bit time to reflect. And I think for now, supply demand is ample, or supply is ample to curb the upside. So I think copper is a little bit of a patience game. But if these rollouts of data and the rollout in the demand for power around the world continues, then obviously copper will continue to be one of the winners in the coming years.
Would you want to put it out as on a stack, on a rank-wise, on how would you look at copper, aluminum, zinc, steel, perhaps work out going forward?
The It's mainly a copper story, but there's some supply tightness as well emerging in some of the others. So generally, as we've had a good year already for the commodity sector. We're up more than 10% if you look at the index as a whole. A lot of that obviously has been driven by precious metals, but if you look into next year, and perhaps that could be a segue to the next question, that I could see energy and industrial metals add some strength next year and potentially be the next engine that drives this commodity rally higher in not only next year but beyond that, which is basically our long-term forecast. The commodities will continue to thrive in this environment, even though economic growth, which normally is the main driver, may not be as strong as envisaged. But there are some supply dynamics that also add some upward pressure on prices.
A final question then, Ole, and this is the third straight year that we are closing crude in the negative. Do you see that continuing next year as well? Or do you think demand, as we're looking at, and as you mentioned, if we're looking at demand coming back for metals, would that be the case for energy?
So you said energy, yeah?
Energy.
Yeah, I think potentially crude could be the contrarian trade next year. We're already now seeing some strength in the product market, which is underpinning crude price as well. Diesel up 8% in the past week. We're seeing there were some concerns about supplies from Russia, the world's second biggest supplier of diesel. That's underpinning the distillate products. And but if we look at the market, the market's been screamed its ears full of record glut, and I'm just simply not seeing it in the way the market is behaving, and it really raised the question whether this glut is going to be the worry there, or the risk that could send prices low in the new year. I think perhaps 2026 will be a year and two halves. I think we heard that many times before, but there's no doubt that we are still working our way through an overhang of supply. Whether it's a glut or not, that remains to be seen. But that we're working through that overhang, which will take us into sometime next year. But again, the current levels from a longer term perspective, where we need to find 6 to 8 million barrels annually just to make sure we cover what is being depleted, but also to meet a continued increase in growth. That basically means we need investments, and I'm not quite sure whether mid-60s is a price high enough to ensure that we have this growth in the coming years.
Well, absolutely. Ole, as always, thank you so much for joining in and taking us through all of those fundamentals and, of course, commodity prices as well, and expectation in 2026. Always a pleasure speaking to you.
Thank you.
And with that, we'll slip into a short break. Up next, we will have Ashish Singhal. He's co-founder of CoinSwitch, joining us on what really seems to be happening with crypto as a market space and how does 2026 look to him. Welcome back. You are with us on the Big C on CNBC TV18 Prime. Joining us now on the show is Ashish Singhal. He is co-founder of CoinSwitch. Ashish, hi, thank you so much for joining in. Well, first of all, your sense on the kind of sell-off that we've seen. $1 trillion wiped out in a matter of 6 weeks. How are you looking at those headlines?
I think obviously, it's daunting to see that, but I think there is a proper reason behind that. Multiple reason in combination is causing that sell-off. Primarily being the uncertainty regarding the US Fed rate cut, because of which the liquidity in the sector is supposed to be pulled out because it's a risk on asset. Second, ETFs outflows, and which a lot of people don't talk about, is also profit booking. This industry, in its existence of last 15, 16 years, this is the first time that big investors can actually take out profits from the ecosystem without hurting the market that much. But it's still, creating a sell pressure in the market. So I think these factors are causing the sell-off in the crypto space, including the AI news and the tech sector being overvalued. I think those all in combination creating uncertainty in the sector.
Ashish, when you step back and look behind at 2025, what is the sense that you get from this market? Because the first half was all about celebration and the fact that we were looking at US taking a lot of lead and markets really, outperforming various other asset classes. But that seems to have changed in the last couple of months.
No, you're absolutely right. The entire lead of 2025 have been wiped out in this, sell-off. But I would still look at 2025 as a big success for crypto. A lot of regulatory changes, positive regulatory changes have happened. A lot of countries which were, earlier on the sidelines are considering now following the lead of the US. You can see the Genius Act passing. You can see the Stablecoin Act coming into picture, and stablecoin market itself becoming so large and lucrative, and many banks are now trying to enter this segment. So from the development phase, a lot has happened this year in the entire ecosystem. But definitely from the price wise, you are seeing that the entire 30% gain that we have seen this year almost wiping out in this sell-off.
How would you also look at 2026 now? Because we seem to be getting into the new year with everything exactly that seems to be working on market right now.
I think 2026 would be a little cautious. I personally feel that, being in crypto, obviously, I would feel that 2026 would be great. But from the policy standpoint, I definitely still believe in that narrative. I still believe that US will continue to push crypto policies in the forefront, and other countries will join in as well, hopefully including India. While from the price point of view, I'm still a little bit cautious because there is a lot of froth in the US tech market as well, with the AI circular financing, and a lot of talks about the AI bubble in general would definitely hurt not just the tech ecosystem but also the risky asset class which Bitcoin and the crypto ecosystem is. So I'm a bit cautious on the price wise, but I'm definitely very bullish in terms of the progress, growth, and policies that would happen across the world in 2026.
Ashish, how would you look at various statements that have come in last 2 or 3 sessions, whether it's from El Salvador or Michael Saylor for that matter? Stancy still saying that, well, we're looking at higher prices going forward in 25, 26 as well. And then that's exactly what we've seen from Bernstein, etc., that yes, some correction would come, but longer term, it still is very, very high levels of Bitcoin that all of them have put forth.
So it's a game of supply and demand, right? As demand continues to increase, more positive policies continues to come out, the demand is going to be very, very high. And since the supply of Bitcoin is limited, that will definitely reflect in the price of Bitcoin. In the short run, I am not expecting a large change. Maybe probably 93 to 95 range is what I'm expecting. But hopefully over the period of next year itself, there could be drastic changes in the price based on the development in this sector. And we are expecting that development because of the policy shift that we have seen this year, which hopefully continue to lead into the next year as well.
Ashish, while 2025 would be known for a lot of things, it perhaps would also be known for the quantum of hacks and highs that we've seen in this year.
Yeah. No, absolutely. While I can categorically say that CoinSwitch have been one of the key players in this industry, and these kind of heist hacks are not, we are not impacted by any of these because of our high level of compliance, KYC, AML, and also because of the reason that we don't allow crypto withdrawals and create a kind of a safe space for users to invest easily on the platform. But we have seen in India and across the world a lot of scams, heists happening in this space, and that is also the reason regulation is very much required. Because when the regulations are in the picture, then every company in the crypto space has to have the same level of the law adherence, the KYC, AML policy adherence, which we are not seeing today. Some people can take the highest level of adherence, and some people can be on the lower end, and that's why this kind of uncertainty, or this kind of difference in the approaches can cause many platforms to fall victim to these heist and hacks. Hopefully with the regulations that could be made much stronger, and that's what our expectation is from India as well, that hopefully 2026 becomes the year of regulation for crypto in India, and bring out the changes which actually protects the user at the end of it, make sure the platforms they're investing in are safe, secure, and aligned to the user requirements.
Oh, absolutely, Ashish. Was my next question, really, because while we have a tax system already in place, and for various reasons, the regulation really needs to come in for consumer protection, one, grievance sell as another, and then, of course, the markets do understand that there is a hearing at the end of it.
Oh, absolutely. So taxation, while crypto taxation is a bit higher, but at least having that taxation gives clarity to the investors on how to go about filing their tax returns. While it's a lot higher in the crypto space, almost 1% TDS and 30% tax directly on the profits, and you can't even offset your losses, which I believe is a deterrent for anyone to come into this industry. Hopefully that get clarified along with the regulations, making sure that users at the end of it feels protected getting into this ecosystem, getting into the platforms like CoinSwitch and many others, feel safe and secure, that their money, hard-earned money which they're investing into crypto, is safe and secure.
Ashish, what is CoinSwitch's plan now for 2026? We seem to be looking at a market that is stabilizing, perhaps going to be more volatile going into the next year as well.
I think our plans remain steady. We want to go deeper into crypto. Hopefully, launch multiple more products, increase our lead into the Indian ecosystem. We are already the largest player in this ecosystem with 2.5 crore users. Hopefully, that continues to grow. Our initiative doesn't lie just there with a number of users. Hopefully, we are able to impact the learning, education, and regulations as well in this industry in India. And hopefully, you will see 2026 becoming one of the key years in which the crypto regulation hopefully shapes up well in India through the CoinSwitch efforts as well.
All right. We really hope for that and all the best for 2026 going forward. Ashish, what a pleasure speaking to you. Thank you as always. And with that, it's a wrap on this episode of Big C. Thank you for watching.